Let's talk to Troika Dialog's chief strategist, Christopher Weafer. Chris, thank you very much. Great to have you in London. So, a switch of roles, but essentially we now know the political roadmap. Surely this sets a different tone for us in terms of looking at Russia. Perhaps we're in for a little bit more of a settled period?
Yeah, well, I think for the last year, we have been in a transition phase almost since last summer, and particularly since September when Putin and Medvedev announced the reversal. And if you like, all the focus since then has been on the political transition. And of course, once the protests started during the election campaigns for Parliament and President, you know, that of course took over. So essentially there haven't been any great initiatives from the government in terms of changing the economy or pushing through some of these economic reforms that have been long talked about. We haven't done anything for a year. And that's created something of a vacuum, which has allowed, if you like, the market to drift lower, despite the fact we have good macro. You know, the assets in Russia are trading very cheaply. We saw that today, of course, with a vengeance, and a lot of that is because we don't have government initiatives as yet.
Well, tell me this. Putin, you know, gets anointed this weekend. What do you want to hear out of him, and Medvedev for that matter, to convince you that you can go to investors and say, listen, guys, time to bring the dollars back here?
Okay, well, we want to see, first of all, of course, next week we say Putin, and then by the end of the week we should know who the lineup of the new government. So we're hoping to see a government that represents a lot of new faces, like new enthusiasm coming in, if you like, a new team to kind of push forward. So that'll be the first thing. And then immediately this new government, of course, will be faced with looking to revise the budget. Of course, Putin has promised a lot of extra spending. That now needs to be funded, as it were, and we hope that they hear from the new government measures that will not essentially mean just we're hoping for a higher oil price. We're looking for some other more practical initiatives during this review.
Well, we're under $100 at the moment, so that sort of spoils that model. I want to talk to you about equities. I read through your notes. The domestic market is trading at a 30% discount to their 2013 earnings. That's how we value things. Now, things are always cheap for a reason, yes, Chris. So am I looking at a value proposition, or am I looking at a market that could come a lot lower in terms of discount?
No, I think you're looking at a value proposition. That was my basic stance on the domestics. Now, of course, as you know, 50% of the Russian market is made up of extractive industries, oil, gas and metals. And here we definitely see a much more difficult situation. So our advice to investors is to stay, if you like, away or light in extractive industries for now until the whole tax regime issue is resolved, which will be part of the budget debate, where we may see extra taxation, for example, in metals and mining, as we heard this week on gas. So the domestic story is a lot clearer. We have a good macro position. We're seeing real income growth, real wage growth in Russia, about 8%. Retail sales growth, we agree with the IMF's assessment of around 4% GDP growth this year. So a good macro backdrop, which should drive, if you like, domestic spending in the domestic sectors. That's where we're advising investors to focus on.
Well, if we look at the domestic sector, there are a couple of stocks that I looked at in terms of the performance year to date, and you've got Mobile and you've got Eon up there. Are those kind of stocks, the mobile side, the energy side, not specifically oil stocks, but would you still see there's value in those?
Yes, look, we definitely see value. Say oilfield services would be the one sector in oil that we like because of the extra spending. But on the internet stocks like Yandex and MTS Mobiles, etc., and the banks. But while the value is there, the trigger to realize that value is absolutely going to be a more proactive government, a government to start dealing with some of these issues. And critically, the big issue for Russia, why investors are treating these assets cheaply, is because they fear that the good Russia domestic story could rapidly unravel because of what's happening in the rest of the world. So what we need to see is the government taking initiatives to start developing a stronger domestic base. I think if we see that from this new government early on, then we'll start to see that discount on domestic assets in particular start to shrink.
Well, we'll get the curtain raisers soon on policy. Christopher Weafer from Troika Dialog.